Finally, it's happening again. Goatseus Maximus is rallying. The GOAT token is up again. After an initial pump and dump, one of the major Pump.fun ecosystem tokens is back up again. The question is, who is buying here? Who is selling here? Let's have a look at some on-chain data. The data most people are not considering. Let's try to figure out how much longer this rally can last. Now here's the list of the largest Pump.fun ecosystem tokens. So that's the launch pad of meme coins on Solana. And Goatseus Maximus is the fourth largest. It's got a market cap of 164 million. In the last month, it went up by almost 4x. So a gain of 282%. And of course, things haven't always been sunshine and rainbows. After launch, the GOAT token went up quite a lot. Then came the dump. Now it's recovering again. And so are we going back to old all-time highs? Are we going back to more than $1 per GOAT? Now, this is not the first video on the token on this channel. There are already 5 videos discussing Goatseus Maximus. And the very first video was published 210 days ago. That video outperformed the average video. So the average video is here in gray. At the time, the price was 24 cents. Afterwards, we went up by more than 400%, but of course, subsequently came the dump. Now, I was actually quite late with that video because we already got a signal to buy the GOAT token when it was still at 14 cents. So that's over here. This is when Kyle Chessy got into the token. He tends to be an insider. He tends to be very early on various tokens, and we are tracking his wallets. Now, Memecoin trading is 100% a player versus player game, right? Some people win, some people lose. The vast majority loses and just the minority wins. The minority makes the multiple X return. Because of that dynamic, we tend to see capital concentrating in fewer and fewer hands. Thus, if there's no new people coming into the space, we tend to see how Pump.fun ecosystem tokens slow down over time. So have a look at this. This is the number of deployed transactions on Pump.fun over time. We had a lot of activity up until January of this year. Then things came slowing down and now we are picking up again. But we are not yet at the prior peaks. So there's potentially more way to go up, right? That's always a question. How much more upside is there? Within the Solana blockchain, Goatseus Maximus is the 11th largest trending token when measured by the liquidity pool size. So there's 5.3 million of liquidity in GOAT. Here is when Kyle Chessy bought. He got a bit under 10x from that rally, and even from that purchase to today, he's still up. But of course, he sold way back in the day already. The question is always, what's the potential upside? And the easiest kind of comparison is just to look at other Pump.fun ecosystem tokens. What's the largest Pump.fun ecosystem token? It's Fartcoin. And Fartcoin has a market cap of 1.4 billion. That brings us to roughly a 9x for GOAT as a potential upper ceiling. But maybe it makes sense to be cautious a bit earlier than that. This is now GOAT relative to Solana. So we're not looking at the US dollar price, we're just looking at the outperformance relative to SOL. Why is that so interesting? It's interesting because whenever we buy an altcoin, we want to get outperformance versus the ecosystem token. Because if we just want crypto exposure, we just buy Bitcoin and Ethereum and Solana. The reason why we buy an altcoin is to get more performance. There's so much correlation within crypto. So when one thing goes up, other things go up as well and vice versa. There's so much common movement within the prices that we want to see outperformance by taking on more risk. And so when we look at GOAT relative to Solana, the top is probably already after another 400% outperformance. We are still very far away from the historical top, but still, I wouldn't hold my breath for a 10x. After a 2, 3, and then 4x, we are probably already quite heated in the price. And so with that rally, we now see more and more token transactions on chain. We also see new first-time traders in that token. So that's the number of first-time traders versus the number of recurring traders. This does look quite healthy. Here we've got the spot trading volume on Solana. Of course, at launch, we had massive adoption, then things cooled down. Now we start to pick up again. But what I find more interesting is actually the chart on the right. It seems like the larger wallets, they tend to now make up more of the supply. So the way we distinguish between those wallets is by just looking at minimum holding thresholds. So do the wallets hold less than $1,000 or less than 10,000 or less than 100,000 or even more than $100,000 worth of the token? And it seems like the larger wallets are now taking up more of the trading volume. And the reason why I say the smart money is buying, because crypto is both a game of luck and skill, and the more the game is played, the more the capital concentrates towards the people with more skill. So the people that have more capital to deploy, they tended to have made better calls in the past, thus they're more likely to also have some skill. Now here's the number of small retail, medium-sized retail and whale wallets. Here we make the distinction by looking at the number of tokens in the wallet. So on the left side, it's 6,000 tokens. At the current price, that's roughly $1,000 worth of the token. In the middle, it's a 10x from that, so $10,000. On the right, another 10x, so 100,000. And again, we see how the whales tended to accumulate starting at the end of March. We didn't see that much accumulation in the smaller wallet cohorts, at least relatively speaking. So the whales bought the supply and the smart money initiated this rally. It's also always interesting to see whether or not leverage or potential short squeeze is triggering a rally. Because if that's the cause of a rally, we should be potentially careful. This is the open interest on the derivatives market. And this did go up with the price. However, the liquidations didn't really go up that much and the funding rate is still positive. So this is not the derivatives market betting on falling prices of gold and then a few market makers manipulating the price to push up the price, to force liquidate all of those shorts. This is not what's going on because again, the funding rate is currently positive. So the longs actually have to pay the shorts in order to get leverage on the token. It's always interesting who catches those kinds of rallies early, and there's a YouTuber called Sajjad Ali where we again tracked the wallet and he bought the token for half the price just a few days ago. So feel free to follow him as well. He seems to be pretty smart. He bought $4,000 worth of gold for a price of 8 cents. And that was on the 8th of May. Here's his YouTube channel. He's got almost 3 times the subscribers that I do. And yeah, 3 months ago, he did a test buy and sell transaction. And one day, 17 hours ago, he bought gold for just 8 cents. And again, now we are above 16 cents. Now, in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk on and risk off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. as stablecoins get deployed into risk-on assets again, the Bitcoin price tends to go up. Now, in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today. And we're getting to a potential upside of somewhere between $130,000 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure, because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Memecoin team or the Base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising, we still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If we just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history, right? Now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best, and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc., to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all of the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.